Good afternoon, everyone. I know many of you are expecting my son Bill to begin the webinar, as he usually does, but this is Carrie, this is his son, or actually he's my son, and he gave me the honor of beginning this webinar with you today. So in any event, I want to wish all of you a good afternoon, and thank you so much for joining us. I believe today is going to be one of our top webinars ever. We're going to be having a representative from Allianz who's introducing a brand new IUL product that's going to be very, very exciting. And let me just say that before we get started with the webinar, that at Levinson and Associates, we represent approximately 105 life insurance companies, and Allianz is one of our top carriers for IUL. We have an excellent relationship with their new business department, underwriting department, vice presidents, et cetera, et cetera. So as a result of that, and of course, their product portfolio is second to none. So as a result of that, much of our business in the IUL arena does go to Allianz, and it's going to get even better today. So with that said, I am very, very excited that you're all joining us today. From what I understand, this is one of our largest attended webinars in our history. And again, Allianz is a favorite carrier for many of you. And we're going to have our VP come on here shortly. But before we do that, I'm going to have Andrew Paris come on and say a few words, go over a couple of things with you, and then we're going to bring on our VP with Allianz. So with that said, Andrew, I will turn it over to you, and I want to welcome again each and every one of you for taking the time out of your day and spending it with us. Thank you so much. Andrew?
Thank you so much, Carrie. Appreciate that, and we're really excited to get this up and running here today. So again, many of you may know who I am. My name's Andrew, head of marketing here for Levinson and Associates, and I'm going to go ahead and get started here. Real quick on the slide in front of you, you'll see all of the bullet points of what we're going to be discussing today with Allianz. Again, as Carrie said, one of the best carriers in the business when it comes to index UL. They have some features I've never seen in other carriers, like their risk class upgrade program, their rate locking. They have some proprietary indices that are available. So this is going to be really a treat for you guys as we move forward, but certainly one of the best carriers to do it. So I'm going to dive right in here to our first slide of the day, which is the most important slide, which is you all are customers, right? So as you all know, Bill always says, we do not sell, right? That's a conflict of interest for an IMO. We are solely here for you as a wholesaler, meaning we are your back office support. So you are our customer, right? So having said that, your feedback and your satisfaction is our utmost importance here at Levinson and Associates, right? So these just came in this past week. So I want to share some recent feedback from agents that are working with us. And I know that Nikki and Al are on the call today, so we do appreciate you. So I'm just going to quickly read what you have said about Levinson and Associates. Nikki says, Levinson is the most resourceful company I have ever worked with and have been with a few. I can stop looking for an IMO that I can count on for support. You guys are amazing. So thank you so much for that, Nikki. Also, we have Ashley B. helped me with the Annuity 101 training, and Beth created the nicest Sage brochures. Thank you all so much. Al. Thank you, Al. That means a lot. And again, this means the world to us. If you would like to leave a review for us, you can actually do that through our Facebook or Google pages. So you can actually go on there and leave us a review, good, bad, and different. Hopefully it's good. And if you do, you will receive one of our complimentary prospecting books. Okay, so make sure if you would like one of those, especially with IUL training today, we have some great IUL prospecting books that we can send out to you with that review. So make sure to do that. And the last point that I'm going to make on this topic is, you should be watching what we do as a company, right? As we said, we don't sell, but the marketing angle should be the same for you, meaning you should be asking for reviews with your clients and prospects, because the more reviews you have, the better your website looks, the better your social presence becomes, and that credibility is what people look for. I don't know about you, but I go on Amazon and I look at the reviews of the products, right? And if they have too many one-star reviews, I'm probably not buying the product, right? So if you are going to be, long term, if you want to have success in the business, I think a part of that needs to be, a really strong reviews on your pages, right, from your clients. So just keep that in mind as you move forward. Just watch what we do and follow suit. I think that'll benefit you tremendously. Okay, so I'm going to go ahead and move on here to our next slide, which is our 411 Life and Annuity Leader. So this just went out, our latest edition just went out on Tuesday of this week. And this, of course, keeps you in the loop with everything going on in the industry, right? And I know Bill's talked about this before, but you need to know what's going on in this business. There's a lot of carriers that have recently left the business, like on the final expense side. There's a lot of new products hitting the market, like this Allianz product. You have to know what's going on in the business. Okay, so this keeps you in the loop with all of our 90 plus companies in real time, and also what's going on with Levinson and Associates too. So just keep that in mind, and if you're not getting these emails, please let us know. We probably have your incorrect email address. So just let us know, because you should be on our mailing list to receive this every other Tuesday. Okay, so it's a bi-weekly campaign. And it'll help your business tremendously, right? Just to keep you in the loop with what's going on here at Levinson. So I'm going to go ahead and move on to our next slide here. And this is our new contests that we have here at Levinson and Associates. These are with Insure Me Now Direct and Banner Life. So you'll see one on the left-hand side and one on the right-hand side. This is a big deal. We've never done anything like this before. So what I'm going to do is actually give it over to Bill. He's going to touch on the Insure Me Now Direct incentives that we have going on right now. Okay, so Bill, if you're there, you can take us over here.
Okay, good stuff. And I appreciate you and Carrie taking the wheel for a minute. It's unbelievable, because at the same time, literally, we just launched our annuity workshop. And today was the first of 8 classes, 8 hours of workshop annuity training. So very excited about that. We literally have over 100 agents on the other line on a Zoom call. So this is good times here at Levinson, and I appreciate everyone taking the time. This is very exciting as well as the workshop. Why? Because here we have A-plus rated Allianz and their new product launch, which we already have literally hundreds of thousands of dollars in premium. And the product literally launched like 2 weeks ago. So this is going to be awesome. Also shifting gears, talking about Insure Me Now Direct, right? And by the way, what we're going to do is we're going to give away our webinar incentive at the end, right before 3 p.m. Eastern time. And today we have Apple AirPods, an IUL prospecting book, and a Allianz and Levinson Yeti cup. Okay, so some nice prizes. You have to pay attention and answer my webinar question of the day, which I'm going to do, like I said, right at the end of the call, right before 3 p.m. Eastern. Also type in questions as we go, and then we'll answer every single one of you, or just call in and speak to one of our marketers. But what I want to do is talk about what's hot, what's exciting, what's the sizzle here at the Levinson home office. And then I'm going to shift gears in about 5 minutes or so. And then Aaron, our VP from Allianz, is going to take the wheel. Okay, so a few things I'm going to mention is the incentives. Everybody wants to know about cash, yacht charters, trips, right? Which we have all the above, literally. So Insure Me Now Direct, this is probably our hottest platform of 2024. Why? Because everyone, and think of agents, think of consumers, okay? Everyone wants things fast and easy. So when you talk about the low-hanging fruit, the small-term policy, critical illness, cancer, accident, guaranteed issue final expense, right? They want to be one and done. They want to log in at 2 a.m. on your website, apply, get approved, print and save the policy, done. You, the agent, just made a new commission plus renewals. That's simple. So this is a big play. And then all of a sudden, what happened is we started to get some major carriers, great products on the platform, And think about this right now, okay? Number one, with Banner Life, okay, least expensive term product literally in the world, okay? Now think about this. Our premium, our production, because of you all, went up by 3 times year to date compared to 2023, okay? 3 times the business on Insure Me Now Direct, okay? And even if you say, well, Bill, I want to meet someone in the supermarket tonight, at Publix, and I want to introduce myself and tell them that I'm a life insurance agent and be able to pull my phone out or tablet and have them run a quote and make this 1, 2, 3, right? That's the reason why Insure Me Now Direct is in the position it's in today. And we have a new carrier that we are adding to the platform, and it's Symetra for perm and term. So you're going to hear more in the next couple of months, but now is the time. Have your site up and running, and it doesn't matter face-to-face, through a Zoom call, through an email link, through a Facebook ad, through a TikTok video, okay? Just market your site. It's so easy. And we're tying in 5 apps, $500. That's on top of great commissions plus renewals on most products. Then on the right-hand side, because we're doing the numbers we're doing with Banner this year that I just spoke about, we were able to work with them and put another contest together. So simple, okay? Let's move to the right-hand side. First application, if it's on Insure Me Now Direct, $150 cash bonus. If you write your first app on Banner's platform or through iGo on our website, $100 cash, just for saying thank you, token of our appreciation, and I want you to see how easy the process is, period. Okay, so on top of this, let's go to the next slide. This is a Levinson exclusive yacht charter out of Fort Lauderdale, yachting capital of the world, and it's so simple, okay? Think about this, $1 million of FIA premium here at Levinson, and it could be a number of companies. We don't care. $1 million minimum. Boom, you are on a yacht charter and lunch on us. Then, if you write $1.5 million, we fly you in from anywhere in the country, you and a guest, and a $250 gift card. Okay, again, as a token of our appreciation. Now, think about all these incentives. On top of this, most of our carriers now are running incentives. So it's literally a chance to earn thousands of dollars and a nice getaway on us and on our carriers. So you got to run with this. Let's keep moving forward. I know we have Aaron who's ready to rock and roll, so I'm going to have him start in just a minute here. What I want to talk about is my last slide before we jump into the feature presentation. I know you probably heard enough of me talking already, but it's okay because this is important. Our top IUL carriers, which is why we're all here today. So IUL is the hot button. It's about 60% of our total premium. Okay, and when you talk about and think about premium finance, or you think, hey, I have a big fish, right? I need to pull in maybe Mary Reed, or I want to listen to some of Joe Ross trainings or podcast episodes because I know the average target commissions and premiums are around $70,000 to $100,000. We all need to be focused on IUL. And if you look at the top left corner, you're going to notice Allianz is sitting there. You're also going to notice 2 asterisks. Okay, why? The red means approved with SAGE scholarship program. Every consumer gets a 1-year scholarship through SAGE. You're also going to notice a green asterisk. That means Stonewood software compliant, meaning that they approved the sales consumer software system for you to present to clients, okay, which makes the illustration, literally simplifies everything in layman's terms and makes the sale for you or tees up the appointment by using their prospecting books, which, by the way, the winner of today's question of the day is also going to get the prospecting book on us. Okay, so again, yes, we have all the top carriers direct, but you're going to notice Allianz top left, and there's a reason why. And Aaron is going to jump in and show you exactly why they are number one, not only with Levinson, but in the industry today. Aaron, are you there, buddy? Give us just one second. Aaron, can you hear me okay?
Yeah, loud and clear, Bill. Thanks for having me.
Okay. No, we appreciate it. Thank you for being with us today and jumping in here.
Awesome. Well, thank you so much for having me, and thanks for the introduction. I'm going to go ahead here, and on our agenda today, I'm going to share some slides on our new product, the Allianz Life Accumulator. We're thrilled to have this product launched to take already one of the industry-leading IULs and take it a step further. And then in addition to that, we will be going over just a case design study, showing you a real sales concept on something that you can implement to bring to a client today. So with that, I'm going to get started here and share my screen. Let's just see here. Hopefully we can pull this up here.
Yep. I think you just have to expand and you're good.
Perfect. Let's see. You guys able to see it?
Yep, we can see it right now. It's a split screen. We have you on camera on the top, and then on the bottom was the presentation. What's your slide deck?
Oh, perfect. Okay, let me try to flip that just so it's just the full screen for you.
Yeah. No, take your time.
I apologize. GoToMeeting is a little bit new to me, so I apologize for the technical difficulties. Let's see this. Here we go. I think I got it figured out here. We got to show. There we go. All right. Are you able to see my screen now?
So we see. Hold on. We see a blue screen right now, and then let's see. Andrew, are you on as well?
Yep, I'm here. So we can only see a blue screen. We cannot.
There we go.
Now we can see them.
You see the full slides now?
Yep,
Awesome.
we have the full slide on the bottom. We are good.
Perfect. All right, we'll get started then. Sorry about that, you guys, but thank you again for having me, and thank you for taking a little bit about a bit of time out of your day today to learn a little bit more about our new IUL product. We were thrilled going into last week when we launched this. We already had one of the top IULs in the industry, so it was really awesome to be able to take all of the good that we had and make a few more enhancements to that product to really set ourselves further apart in the industry and give you guys a tool to bring to your clients to really help them, whether it's on the accumulation side or the protection side. Across the board, we're looking a little bit better than we were before. So we're going to jump into this here. If there's any questions or anything, please throw them into the chat. We would love to get those answered for you today. This is for you guys. So let me know if there's anything that comes up along the way. So we're going to talk a little bit about just the product in general, some of our index allocation options, a nice enhancement that we made to index lock, and then talk about just a few of our other value propositions and resources that we have here at Allianz to help you guys sell more IUL. So going over, some of the changes, let's start with that. So first off, you have a new product name, Allianz Accumulator. I love the name because our product is an accumulation IUL, right? If you're looking at the spectrum of life insurance in the industry, you have cheap term insurance, you have things like GUL and whole life for permanent death benefit, and then you have your accumulation vehicles, right? Maybe that's an IUL, a VUL, something along those lines. We're on that far right-hand spectrum of the accumulation, and our name now makes a lot of sense. Accumulator IUL for the accumulation product. So I love that. We retired our Life Pro Plus brand name. So that was something that we launched back in 2012. And there's a few different names throughout the years, the Life Pro Plus, Life Pro Plus Elite, Life Pro Plus Advantage, but more or less that product hadn't really changed a whole lot since 2012 and was still an industry-leading product, which is pretty crazy to think about. But we're thrilled to make some product enhancements and a refresh here. So to go over some of those changes, and we'll dive into these in a little bit more detail, but overall, one of the biggest changes that I'm thrilled to share with you is we reduced the product's premium loads. So the old product had a supplemental premium load. So if you were looking at doing a 1035 exchange, it might not have always looked as competitive as it should have. We did away with that supplemental premium load. And then we also overall reduced the premium loads in the early years on the contract. So that means more cash value in that contract for your clients and better accumulation values. The other thing I'm thrilled about is that we more or less kept target premiums the same. So while we reduced product cost, we kept target premium, the thing that pays your compensation, right, the same in every cell except for the age 60 plus cells. We did have to adjust those down a little bit for the 60 plus demographic. Luckily, the majority of the sales that we see are 60 and below. but we did have to pull those 60+ ones down just a tiny bit. Still very competitive. Another super exciting change that we brought forward to you guys, and we'll show you when we run that illustration here in a minute, is our classic bonus. So for those of you that aren't familiar with the product, the old one had a 90 basis points guaranteed classic bonus that brought the floor of the product up to 90 basis points if you were allocated to that classic. We increased that now to a full 1%. So, really excited to have that, increase in the product, and that can be shown in illustrations because that is AG 49 compliant. So we're thrilled about that enhancement. And then something that I think that you guys will be able to bring forward to a lot of people today and take advantage of this higher rate environment that we're in is our premium deposit fund has now increased from 5 to 6%. And to my knowledge is one of the highest now in the industry at this 6%. So a great opportunity, right? If you have some clients with some idle money sitting maybe in a savings account or a CD that's not really being utilized, a great opportunity to earn a great rate of return of 6% and then be able to pay that into the policy and not have to worry about going back to grab another check or resell that thing down the road. In addition to all of those great pricing adjustments that we've made, we launched some great new indices. I will touch on those here in a minute and dive into those in a little bit more detail. And in addition to that, we are keeping our risk class upgrade program. For those of you that are not familiar with that, that is taking anybody that comes in at a standard risk class, so a standard tobacco or a standard non-tobacco, and bumping them up to preferred risk class. So for the non-tobacco folks, that'll be preferred plus. That's a 2 risk class upgrade. In addition to that, if it comes in at a preferred, we'll bump them up to preferred plus as well. So you're getting a nice upgrade there for the majority of your clients. And then if they're tobacco users, you're going from the preferred tobacco to preferred plus non-tobacco. So a great opportunity here. This program will go through the end of Q3, at which point I do believe we will sunset this program. So you have a nice window here through the end of September to go re-engage with some of those clients that maybe in the past you quoted. Maybe they were sitting on the fence, maybe they weren't top risk class. You can go back to them and share with them that for a limited period of time, you would be able to qualify them at preferred plus non-tobacco and get them that top risk class, which would stay on that policy for the life of it and reduce those cost of insurance charges and save them money for the life of that contract with this program that we have going on for a temporary period of time. So really excited that we are able to maintain that risk class upgrade program here for a little bit with the new product. There's never been a better time to get into an IUL. So as I mentioned, the premium load updates, as you can see on the previous product, the Life Pro Plus Advantage, we had a premium load of 8% years 1 through 9, and that reduced down to 4% years 10 and on. But the caveat to that was there was a supplemental premium load. So if you were doing a 1035 exchange, anything above that 7 pay or that max non-MEC premium amount was getting hit with an additional 14% premium load, which that was, we still saw some 1035 business because the product overall was so competitive, but that really dampened how good those 1035s should look. And it made it very difficult for me as a wholesaler to go look you in the eye as an agent and say, hey, let's go review your book of business and look for replacement opportunities because that 14% load. So we have since done away with that. You can see that the premium load in year 1 did increase 1% to 9% in year 1. But then we cut down that premium load starting in year 2 to 5% right away. So you're not paying that 8% years 1 through 9. So it's much cheaper from a premium load standpoint across the board. But where you'll see the biggest win there is, again, if you're doing a super short pay or doing a 1035 exchange. The majority of our contracts we see here at Allianz are somewhere in between 7 to 20 years of payment. We use forecasting for our purposes to say the majority of our sales are at a 10 pay. So that just gives you, some peace of mind that if you're looking at a 10 pay across the board, you're seeing significant savings on that premium load looking at the new product relative to the old one. And then, touch on some of the index enhancements that we launched here. So as you guys know, we were the first carrier to launch index lock on the life insurance contract, which allows you to lock in your rate of return at any point in time throughout the year, right? You don't have to wait for that segment to mature or wait to your anniversary. You can lock in a positive return at any point in time that you would like. And that's something that we're so thrilled to, we're thrilled to launch a few years back, but we only had 2 indices that were lockable before. So our Bloomberg and our PIMCO that you guys were familiar with were always lockable, but now we have 4 lockable indexes and we've made enhancements to a few of them. So the most exciting thing to share with you, I think, in my opinion, to talk about today is our new S&P 500 Futures Index. That is an uncapped S&P 500 option that is lockable. And there's no volatility control. There's no bond component. This is just tracking the S&P Futures Index, 100% equities, and it's lockable. So we're thrilled about that. We also have made some enhancements to our Bloomberg Index. So as some of you know, if you've been working with us for a handful of years, if you were to look 10 years ago, the Bloomberg Index was actually one of our #1 performing indices. But for the last 4 years or so since COVID, when there's been such high bond market volatility, you would see that the Bloomberg in recent years has underperformed. So we've made some enhancements to that here with this new product and launched it. Instead of being the Bloomberg 2, it is now the Bloomberg 3. And we pulled out that bond component from that indice. So it's just going to be shifting between equities and now essentially a money market cash component. Be much more quick to deploy that capital into the equity markets and capture some of that upside, and also not have that bond component risk where you could see, the bond market the bond market's underperforming, bond values are getting cut because rates got hiked so quickly. No longer have that risk in that Bloomberg. So it's going to be, much more stable values and also be a little bit more nimble to deploy into the equity markets. So we're thrilled about that. And then we also made some enhancements to our blended index. So now our blended index will also be lockable. So you're going to have 4 lockable indices: the S&P 500 futures, the Bloomberg 3, the blended, and then we kept that same PIMCO allocation that you guys are all familiar with. So you have those allocation options in addition to our fixed account as a great place to allocate some premium to. So we're thrilled about these enhancements. And then we did also keep, if you were more comfortable with an S&P 500 annual point-to-point with a cap, we did keep that S&P annual point-to-point with the cap at a 12%. So if you don't like the lockable indices and just want something a little bit more simple, we do have an incredibly competitive cap still on our traditional S&P offering. And as you can see here, what I love about our contract is that it's not a one-size-fits-all. We have an index that really can fit for different risk tolerances, work for different market environments. It gives you a lot of different tools at your discretion to help create a positive outcome for your clients. But I want to show you some data here on this new S&P 500 futures index to show you the real value proposition of it. So on that graph that you see on your left-hand side in pink, that will be the S&P 500 futures index that's available in the product. And the blue, you will see the actual S&P 500 going back to 2003. So we have about 20 years of data here that you can see the two indices. And as you can see, they perform very close to one another. There's very little deviation in between the S&P 500 and the S&P futures index. They're very similar. But then we can apply how it would look over on the right-hand side within the product. So as you know, the true S&P 500 has always been a capped option here at Allianz. If you were to look in those early years, you would actually have probably seen a cap a little bit above 12.5. If you were to look in the later years, recently it's been at 12.5. But if you were looking at 20 teens, it's probably the cap a little bit below 12.5. But a good barometer, a good average cap over that 20-year period of time, I would say would be about a 12.5% cap. And then we currently have launched this classic bonus option at an 80% par rate. So essentially you're able to capture 80% of the S&P and also have a floor of 1%. So we did a retro, look back on this. So if we looked over the last 20 years, how would this have performed for you? And we're thrilled, if you look at this data, that you're actually exceeding an S&P 500 with a cap by about 400 basis points, right? 4% difference there in a positive manner, 300 basis points difference, 3% difference in between the two in a positive manner. And what I think is so exciting, right, is, in a bad year, there's not a lot of difference, right? If you get a 0, well, now your 0 becomes a 1 with that guaranteed bonus. That's great. But where I see the big difference is if you look in those bull market years. For instance, if you take a look at 2009 or take a look, at 2021, some of those years when the market really, gave us a nice strong double-digit return, you're now able to capture that upside. Something that in the past you were being capped out at 12.5%. Now you're able to see that, something that mimics a true return much closer. Really, providing VUL-like performance, right, within an index product that protects your principal and gives you that floor, I think is a really exciting story to give, bring forward to a client. The other thing that we made an enhancement to on this new product is index lock. So many of you have been familiar with index lock, right? That's that ability to lock in a return prior to your anniversary. Whether you're going onto the website and locking it in manually, calling into our service team and locking it in over a recorded line, or utilizing our website to set an auto lock target. So that auto lock target allowed you, right, to set that threshold, and if that policy ever hit or was above that target, it would automatically lock it in. We also have rolled out now what we call auto renew. So say you set that target at 12%, you used to have to go in there and set that every year on your anniversary. You no longer have to do that. You can go in and set that upper target and click the auto renew tab, and that will then keep that on for the life of the policy until you take it off. So a great peace of mind if there's a return that you say, hey, I illustrated this at 6. If it ever gets double my illustrated rate, I want to automatically lock it in. You can have that set to be on the life of the policy if you would like, and never have to worry or think about going to adjust it again. Another addition that we made to this product is a lower lock. So if you've sold some of our annuities in the past, you may have seen this, but we're thrilled to have now the lower index lock target. So what that allows you to do is to set a lower target lock and protect a gain. So at the beginning of the year, you can't actually set a lower lock. You can only set that upper. But once you have a positive return that you're trying to protect, you then can go on the website and set a lower target. So for example, if you say had an index that was at 6.5%, you could go in on the website and set a lock at anything below that, say 6%. And if that index ever hits 6 or dips below 6%, it will then trigger that lower target lock and automatically lock it in. I see a ton of value here with that lower target when you approach an anniversary, right? If you're past that halfway mark in a year, you have a great return. Maybe you have a 22% return in that new S&P futures index, and you're like, hey, I illustrated at 6 or 7, I'm up at 22. I'm going to set a lower target at 15. And that way I know that even if the S&P starts to tail downwards, that I'm going to be able to lock in a return that is much above, much higher than what my illustrated rate was and protect some of that gain. So I see a lot of value in that as you approach an anniversary. And you'll see what that actually looks like here. Right here, this is what, if you go on the website, this is exactly what it will look like. So you can see here, this is showing essentially 2 indexes, upper and lower here. So two separate indexes, but you can see on the lower index, you're up at 8.9%. You went on the website and requested a manual lock. So that's what that manual lock would look like. That's saying at market close today that we would lock in that 8.9. If you look back up here at the top, that's looking at the 7.7% return, and then we're setting 2 targets. So you can see that, hey, we're going to set an upper target. If this thing ever closes at or above 12% at market close, it would lock it in any given day. Or if it dips at or below 7, it would also lock it in on the lower target. But a great little visual here of how that looks. And something that I think that we do really, well at Allianz is helping you guys service your business, giving you good information. So many IUL companies only show you your returns on an annualized basis, maybe quarterly, or their website has significant delays in showing you that information. We show you your index data daily. You'll see values updated daily on our website, similar to what you may see with a VUL, but you'll see data in, within a day of it real time, which is pretty unique in the indexing space. So we're really thrilled about that. We also have something pretty cool for you called Index Lock Report. So some of you I know sell a lot of Allianz, you sell a lot of policies. Maybe you've got 20 or 30 of these things on the books already. Tough for you to keep track of all your clients. But we have a feature here called Index Lock Report, where you can go on the Allianz Life website and you can click this Index Lock Report button and say, hey, I want to see any of my policies above 10%. And it will then generate you a list of your clients that have lockable allocations in any of their life or annuity policies that are lockable above whatever rate you set, and tell you where they're at currently and the name of the client. And what that does is allows you to then share that information with your clients, call out to them proactively, share the good news, maybe see if they want help locking it, But if they don't, at the least, they know that you're paying attention to the business that you sold them, and allows you to share positive news with them and hopefully uncover some new client opportunities, or a great opportunity to ask or receive a lead, or a referral, because they care so much about how you're servicing their business, paying attention to it, and proactively reaching out. We give you some great tools to do that. Another thing that I would like to point out here is our loan provisions. When we're talking about cash value life insurance being used for accumulation, right? Having a good carrier that's stable and going to be there, to pay the claim, super important. That's table stakes. Us here at Allianz, we have a 96 Comdex, or we're top rated from all the bond rating agencies. You can surely account that we're going to be here for the long run. But the other token to that is, how easy can you get at your cash value? And something that I'm super proud of here at Allianz is our loan provisions, because we guarantee them. And that's something that's not super common in the industry, right? Many carriers tie their loan provisions to a bond index, or they don't guarantee it. But whether you're utilizing our fixed loans, or you're more used to taking an index loan, right, and want to keep earning interest on the money that you're already spending, we give you some of the best loan provisions in the industry. So if you look here on those fixed loans, we charge you in your first 10 years, essentially an upfront charge of 2.91, and we credit you at 2. So you're looking at paying about 91 basis points, or say 1%, to borrow your own money for the first 10 years. Starting in policy year 11 and on, you can see that we're charging you 1.96, crediting you 2. We're actually giving you 4 basis points to take your money on a fixed loan with us starting in the 11th policy year. But what we see more of is our index loans, and we contractually guarantee those at 5%, cannot change for the life of the contract. But then we'll credit you interest on those indices that you're still allocated in, as if that money never left the contract. So say you're in that S&P futures index and get a 20% return. Well, you paid 5, your index is credited 20. You're making 15% on money that you already used, maybe to pay for a college education, maybe used for that down payment on a home. Pretty unique, product that allows you to keep earning that positive arbitrage. If some of you maybe are familiar with whole life, right? Those index loans are akin to non-direct recognition loans, which back in the day, non-direct recognition loans were awesome. You maybe had an 8% loan charge in a whole life contract, maybe you had a dividend at 10%. So you're making 2% on that money that you were borrowing. The problem with those now in whole life is dividend scales have come down so much, and loan charges have in some contracts as well, but you're not getting that positive arbitrage. Here at Allianz, we've historically averaged over a 6% interest credit since we've been selling IUL, similar to the ones we sell today in 2006. So we're doing a really good job at providing that positive arbitrage for clients with our index loans. And again, just remember that those are guaranteed. We give you the ability to change those loans every year on your anniversary, so you can flip between fixed or indexed loans as you would like. And we also allow you to blend it. So maybe you want to do half indexed, half fixed. We give you all that flexibility here at Allianz. We also at Allianz, give you a few riders, such as our overloan protection rider and our terminal and chronic illness riders at no front end charge to you, which is great to pair up with an accumulation contract. So that's something that I think is great to share. And then we also have some phenomenal resources for you guys. So, we have a full suite of marketing and advanced markets materials if you maybe are working with a business owner to bring forward. We also have some great software tools that I'll show you here in a minute. So we're going to pull up our software and walk through just a case design and some of the resources that we have built in for you at no charge on our software. So with that, while I pull up the illustration software, I know it was a lot of information, but would love to just open it up for any questions here while I pull up a different screen. Any questions in the chat?
We have one quick question from John. He's asking what the current fixed rate is right now.
Let's pull it up. I believe it's at 5.4, but I don't want to misspeak. I'll pull up our current rate sheet. Are you guys able to see here still the Allianz Life website on the main page?
Yes.
Awesome.
Yep.
Okay, so this is what the website will actually look like for you guys if you log in. You can always find our current rates here on the main page by clicking the View Current Rates button. we'll pull this
Aaron,
up here.
We only see your slides still, actually, not the website.
Oh shoot, let me change that over. Let's see. All right. Are you seeing it now?
Yes. Yep.
Perfect. All right. So let me just go back a page so you guys can see where to find this for your own reference in the future if you ever want to see where rates are at. So when you log into the Allianz website, it'll look just like this, but it'll say your name, not mine. And you can scroll down here where it says rates, view current rates, and that will pull up for you our current rates. And you can do this actually for any of our products here. So I'm going to show you the life accumulator because I'm your life insurance guy. But if you sell some annuities with us or other products, you're able to check on all of those rates right here. So we're going to click here, Allianz Life Accumulator, and click Go. And you'll see that our general account, that fixed interest account, is at 5.4%. You'll also see here, we have some phenomenal rates right now. So that new S&P Futures Index, you can see 80% par rate with our classic 1% bonus that's guaranteed. Also, for our 15% multiplier bonus, also an 80% par rate. And then for your more aggressive clients, maybe you have some young clients in their 20s, 30s, 40s that have lots of time horizon. We have our 40% bonus with a 1% asset charge here. And just to back into that for you for a minute, if you think, for example, right, you remember that graph that S&P Futures Index really mirrors the true S&P very closely. You're able to then get a 75% par rate. So let's just go over an example here. Let's say, for example, the S&P did 17%. You got a 17% raw return. Well, you're getting 75% of that, right? So 0.75 times that 17% return is 1275. But then you have to multiply that times your 40% bonus. So multiplying that 1275 by 1.40. That's giving you a 17.85% return. Now it's oversimplifying it to subtract 1% from that because the 1% actually comes from an asset charge that's deducting 8.3 basis points monthly from your contract fund to add up 12 times 8.3, right? That's 1% annually. But more or less, right, you're getting almost a full true return when you're using that 40% bonus with 1% asset charge. 17.85 would actually take you up and above the raw index return, and then the asset charge would bring you a little bit below it. Say you're losing about 15 basis points. But a pretty cool story to show that, hey, your floor is -1, but you can still capture full market upside. I think that's a great story to bring to some of your younger clients that are looking for some strong returns. So with that, just remember that you can always check on your current rates there. Fixed account, to answer your questions, at that 5.4. I think super competitive in the industry. But we're going to pull up here just our illustration software and walk you through a quick case design, show you a traditional LERP strategy that you can bring forth to one of your clients. So with that, we'll launch Allianz Accumulator. I think Carrie and Bill are sitting in the great state of Florida. I'm jealous. It's cold and rainy here in Minneapolis right now. I wish I was in Florida. I bet it's sunny down there. So we're going to pull up just a case design in the great state of Florida. And let's work with a young client. Let's say that you're working with a 40-year-old client, high earner, potentially, needs the death benefit protection for their family. Maybe they're already maxing out their 401k and looking for another place to diversify some retirement income. So let's run a 40-year-old and show you what the power of this product can do. I always, am a big believer in under-promising and over-delivering. But when you're running us right now, I used to always run a standard non-tobacco because I like to make sure, hey, even though the majority of our underwriting comes in at a preferred or a preferred plus, I'd rather quote you a standard. But with our risk class upgrade program, pretty much most of the policies we're seeing now are preferred plus. So I'm going to go ahead and run this illustration at preferred plus. We've got 2 months left of that program, again, through September for you guys. So keep an eye out for that. And when we're designing these accumulation products, right, the whole idea typically is to reduce those charges. So I'm going to work with a budget of saying this gentleman has $1,000 a month that he can put into this. So we're going to go in here and say he's going to pay a monthly premium. We're going to specify the amount. We're going to say he's going to pay $1,000 a month, and he's going to pay this until age 65. So we're going to show this paying from years 1 through age 64. Again, the policy shows end of year policy values. So if you are in the illustration software, you'll want to tighten that up just 1 year before age 65. You want to say age 64, so it stops at the end of that policy year. And we're going to solve then, go back up here, we're going to solve for the minimum face and the maximum accumulation. And we're going to use an increasing face amount during those funding years. So we're going to say age, or years 1 through age 64, we're going to use increasing and level it off at age 65 through maturity. So we've got this here, and then we're going to show some income. So we're going to show income coming out the year after at age 66. Let's just show you a quick case design here of this to show you the power of what this can do for them. And again, if any of you ever do have case design questions, need help with the contracts, myself as well as my internal wholesaler, I have a couple of them that work with me. We're always happy to help walk through case design for any of your clients. Don't hesitate to reach out and give us a call. So I wanted to show you a few tricks here. So we're going to go here and run this. And you can see, so I need to just make one adjustment. We need to throw that income stream on here at age 65 through M. So we've got this design here for you. You're able to see that we're paying that $1,000 a month here for 25 years until age 66. And at age 66, we're turning on income. And you're able to now, with this new product, you'll see some crazy good numbers here. $70,000 a year in retirement income for the rest of your life. So you're not outliving this income, right? Pretty cool story to show. But again, minimum face solve, I want to go back up here and show you. So you can see that the smallest face amount possible for that amount of premium that we designed, $195,000. Now, target premium is around $4,000, pretty strong. But again, we talked about this being a 40-year-old that needs some more protection. You know, he's got a wife and kids, family potentially. So what I'm going to go in here and do is I'm going to round up to our nearest death benefit band. At Allianz, we have death benefit bands at $300,000, $500,000, and $1 million. I'm going to go in here and override the software and specify that face amount up to be at $300,000. So a couple of things. Now he's getting over $100,000 more in protection that he needs for his family. You can see that target premium jumped up about $2,400. So you're getting paid more for your hard efforts on this. But let's go back and see how that impacts the income. More protection, more compensation, right? Both important things. But when we look at that income, it barely came down because we rounded up to that nearest death benefit band at $300,000. Still getting $68,000 a year in retirement income, and that looks great. And you might say, right, a critic might say, of course, Aaron, that looks so good because you're running that at a 6.7% rate of return year over year. Let me do something. Let me run this at 5%. That's below our general account. Let me try to make this look bad for you and show you what happens. So when I tone that illustrated rate down to 5%, look at that. We're still getting over $40,000 in income and a residual death benefit for the rest of your life while doing that. I'll do one more for you here. I'm going to run this at a 4% rate of return. And don't forget that the index loan charge that this contract's showing is at 5%. So I'm running this below what the index loan charge is. I'm trying to blow this up. I'm trying to make this look bad. Well, even at a 4% rate of return, you get $12,000 a year in premium, right? Giving you over $22,000 in income for the rest of your life and residual death benefit. And pretty strong residual death benefit too, if I don't say, right? After taking all that money out, $22,000 a year, let's look at age 90, over $500,000 in death benefit left for your family. So a pretty cool story to show that, hey, this new product, because we reduced some of those charges, can provide such great protection and returns, but still spin out some pretty strong income, even when we run this at an incredibly conservative rate of return. If we look at those, historical averages, we've averaged our policies a little bit above 6%. Some of those new indices, our default allocation stories, averaged over 10%. But even running this thing at 4, you can create a great outcome for your clients. So love to share, the strength of this new product with you guys, show some of those enhancements. We're thrilled about the lower index lock target, the new indices that I think you'll see a ton of success with. And then again, some of the lower product charges, I think is just a great story to share with your clients. And don't forget that we have that risk class upgrade program, bringing anybody that comes in at a standard all the way up to preferred plus non-tobacco here until the end of Q3. So with that, I would love to just open it up for any questions. I think we have about 8 minutes left here on the calendar. Any questions that you guys have, I would love to answer.
Yep, Aaron, what we're going to do, we only have, like you said, about 7-8 minutes left. We're answering all questions, and then we'll patch you in after the call if needed. But we so appreciate you jumping in. This was great. And I have just a couple other things, and we'll get everyone out right before 3 p.m. Eastern, like I promised. So thanks again, Aaron. And then what I want to do next is talk about how to get started with Allianz and Levinson so you can leverage all of our tools, platforms, lead programs, all the above. And what's unique to Allianz is you can get pre-appointed now without a case. Okay, so if you want to start quoting, you want to jump in, leverage the tools, what I would recommend, we're going to send a thank you email out tonight, including all the links. So keep your eyes peeled for that. It'll be before we leave, so around 8 p.m. Eastern time. If you can't wait, jump on our website as soon as we hang up, and you can see the yellow arrows in front of you. It says contracting. Just under there, you can leverage cash for contracting or leads for contracting with your first application paid. So that means if you're writing today with another IMO, not Levinson, which that would be a shame, we hope you move the contract over to us. We'll match or beat your comp, plus you get these extras, either orphan leads or cash with your first paid app. So you got to take advantage of that. Right-hand side, new product material. Okay, everything is already uploaded into our site. If you just go on life insurance, and then you'll see a red box. Right-hand side, product info, and then everything will show up in front of you, just like on the bottom right-hand corner. All right, let's keep moving forward. I want to talk about now you have this great product, great carrier, right? Number one IUL in the country, bar none. How are you going to plant the seed, right? How are you going to open doors to tell your story? Where are these clients and prospects coming from? Okay, so you have the great product on a shelf. Now you're going to learn to drive traffic. Okay, so we put together some awesome trainings, podcast episodes, YouTube videos, all the above. Now, you have to jump in and take the time, right, to digest and take down your notes, or nuggets is what I call them, and now start getting the word out. We show you exactly how to do that. Let's keep moving forward. All of this is on our website, by the way. What I also want to share is you have a great story to tell with Allianz, right, with the new accumulation IUL product. Now, if you're using the Mary Reed strategy, maybe the focus is more on living benefits as well. LSW, National Life, has another good story to tell. Okay. Now, if the focus is cash accumulation, I definitely would steer towards Allianz, but we do have other options as well, depending on the consumer goals. Meritus and then Columbus is on the bottom, and they each kind of have their own niche. So depending on underwriting and like I said, depending on the goals for the insured, we can customize a quote and product for you. So just call any one of our marketers anytime. Let's keep moving forward. What I want to do next is talk about the scholarship program. This is free to you. There's no commission reduction. Okay, I mean, literally, it's a win-win-win across the board, and there's now 466 colleges across the country that are in the program. Okay, so when I look at this platform, if I put my agent hat on, I say, why not? Why would I not share this story to my friends, neighbors, network, consumers, right? Anybody I know. Why? Because everyone has children or grandkids or a blood relative, right, that maybe is in grade school or high school. Maybe they just started and they want to go to college, okay? And every point, think about this, every point in the scholarship program, it is $1 of scholarship. That's up to 1 year. So 1 year free tuition, 25% off each year, comes out to 1 year complimentary just because they bought a policy from you, the Sage Levinson approved agent. Okay, again, doesn't cost you a cent, doesn't cost them a cent, no commission reduction. And if you notice, top right corner, Allianz was actually the first carrier. It's been like 10 plus years. They approved the program for all, and think about this, anyone that's bought an Allianz IUL policy, even in the past, you can go back and revisit and say, hey, great news, right? Because you bought this policy 7 years ago, you're automatically enrolled in the scholarship program. You set them up. They get their own online, it's like an online checking account with Bank of America. okay? But it's their Sage account. And then every time they log in, they see your name, right, as the agent, as the approved agent that enrolled them. So think about referrals. Think about annual policy reviews, right? There's so much opportunity here. It really is a no-brainer. If you're not using it, you're riding a horse in reverse around New York City in 2024. I always say it, but you shouldn't be on that horse in reverse, okay? You got to take advantage of these platforms that only Levinson offers, by the way, at no charge. Let's keep moving forward. Stonewood, another awesome platform, okay? We can run, any one of our marketers can run these illustrations, these sales presentations for you for no charge, okay? Or if you want to be a VIP member and have your own software so you can run your own presentations, workshops, you can do one-on-one seminars, we give a discounted rate for our agents, and then we actually pay for the program if you're writing a certain minimum IUL premium every month. It's a reimbursement program, okay? So again, no-brainer. Let's keep moving. This is our latest product launch. In fact, just launched yesterday, okay? The new SBLI Final Expense platform. All right, I'm telling you right now, premium is the most competitive for non-smokers. It is the most competitive final expense product out there, neck and neck with Mutual of Omaha. In fact, SBLI typically wins every battle, okay, if you're lining up various carriers in our quoting engine. So definitely SBLI, awesome street level commission. I think you'll be very happy, and then generate 1 to 3 exclusive leads a day with our platforms. Take advantage of this now. It's also pre-appoint, meaning you can get set up today and have a great product in your toolbox. Let's keep moving forward. I'm almost done. So now you have these great products, you have the great platforms, resources. You need to spread the word, right? You want everyone to go to you thinking, hey, Bill, he's that IUL guru, right? And I need a quote, or I have a guy, I have a girl. Okay. These posts that you're looking at, we went into Instagram, Facebook, we did a search. We put in indexed universal life, top performing posts. You don't have to reinvent the wheel, folks, okay? These 3 we picked out right before we started. Over 4,000 likes, hundreds of comments. And look, are these that creative, or do you have to be a rocket scientist to put this out on your Facebook and LinkedIn and Instagram and TikTok page? No, this is very basic. And you got to put together a 1-minute video on YouTube, TikTok. Get the word out. It's already done for you, okay? I mean, just look at the activity here. It's not rocket science, folks. We'll include this in the thank you email. Let's keep moving forward. More trainings on the podcast channel, which if you haven't listened to by now, again, you're on that horse in reverse, which I hope you're not. Left-hand side, that is the best annuity coach I've heard in 25 years, okay? He's doing our workshop live right now on the other line. Okay, in fact, they're just wrapping up. But that podcast is awesome. Check it out when you can. Right-hand side, these are 4 top agents writing IUL today, and they're sharing nuggets, right? That's 4 hours of content. That's free. Okay, these are one-on-one interviews that I handpicked for each one. Okay, you got to check them out. There's no excuses now. All right, everything's laid out in front of you. We're almost done, by the way. The next slide is our upcoming training events, which is what you're on right now. A few I want to point out. The top one is the official rollout of the new SBLI Final Expense product on the 15th. Just under that, Insure Me Now Direct, Amazon, right, for insurance products. We're rolling out the latest Assurity DI product, Centurion, on the platform. So again, it's all direct to consumer. And then on the bottom, One America, one of the top hybrids available today in the life and annuity space. Check that one out on the 3rd of October. And then my Positive Tuesday quote and question of the day, left-hand side, some will genuinely be happy for you. Some just can't believe you keep making things happen. But either way, stay the course. Keep trying new things. Keep your foot on the gas pedal. Okay, that's the only way you're going to be able to get out there and try these new systems, strategies. Get we were talking about current interest rates and fixed rates. Okay, no one has rates like that, but you got to get the word out because consumers, prospects are going to say, oh my gosh, tell me more. And then boom, you tee up the sale, write a new app, you're done. You're off to the races. Let's ask our question of the day. Whoever answers first and correctly walks away with Apple AirPods, IUL prospecting book, an Allianz Yeti, and a Levinson Yeti. This is a nice package. I hope you win. Question is, get your little fingers on the keyboard because you got to be quick. You got to be first. When we were speaking about the SAGE Scholarship Program, how many colleges do we now currently have in the program across the country? How many colleges are now in the SAGE Scholarship Complimentary Program? Tell me the magic number and you win all of those great things that I just mentioned. That's literally about $300-400 worth of goodies. So hopefully you're an active agent with Levinson. Hopefully you answer correctly. Andrew's going to tell us who was number one. Andrew?
Okay. Yep, the winner is Robert G. Robert G.
Robert G. Congrats. The answer was 466 colleges across the U.S. Hopefully you're participating in the program. It's complimentary. Let's have a great rest of the week. I hope you walked away with some great nuggets, and I hope you make some new Allianz IUL sales. Lean on us for questions. We'll make sure we get you up and running 100% of the time. Have a great day and great selling. Thanks again.